now. Okay. Good morning. Katie Stevenson with Norcom Mortgage. I'm talking today with my branch manager, Jesse Gnazzo, and we are going to be talking about the mortgage process and products that we have for it's not really one size fits all. We have mortgage products to fit most situations. So anyway, hi there, Jesse. How are you?
Good morning, Katie. How are you?
I'm good. I'm good. Well, thank you so much for joining me. And my thought is let's get started with talking about the technology that that Norcom has to offer. So take it away and talk about technology.
So, I think it's important first to mention to your viewers that you've been doing a series with experts in their fields, and well, this week you couldn't get anyone, so that hence you got me.
Yes,
You know
thank
it
you.
all, branch manager. So I apologize to anyone who's got to listen to this. But no, it's you touched on how we're using technology in the mortgage process today, and a few years ago, mortgage technology really kind of changed with push button get loan type thing, and that's great for somebody who's tech savvy, but I think the important thing, technology plays a huge role in what we do. But even for that person who's not tech savvy, our mortgage process isn't a one size fits all. I mean, any lender that says to you, you're going to do this all online and you're never going to talk to anyone and there's never going to be any paper is only looking out for themselves. So, we offer solutions for, I have some customers right now that are a little technologically challenged and want to come in and sign on paper meet with me face to face. The majority of my customers, though, we begin by engaging with the mobile app. So they'll get the app sent to them. They can feed in information. It securely flows right to me or to you or whoever's using it. It gives us permission to run credit and to begin the exchange of information electronically with them. Really from that point, there's a good flow back and forth. I was reading an article this morning in the Scotsman's Guide about how more and more customers don't want to give their email address, but they have no problem texting.
Right.
And a lot of lenders don't want to text. So we find ourselves engaging a lot that way and really getting you to the application process without necessarily the cumbersome sit down. I remember when I bought my first house in 1997, the mortgage guy came out and we filled out the 1003 on paper. He was there for like 3 hours. And I remember saying, I was engaged at the time. I remember saying to my fiance, like, we're never doing this again. We're never buying another house again because that was brutal. And like our parents were there and like know-it-alls, and it was terrible. I was 22 and I just wanted to buy the house. So it's gotten a lot better in the fact that we can work directly with clients. We don't need 3 hours of their time usually. And, Norcom's been operating this way for at least 5 years in a paperless process, but I've kind of gotten off on a tangent here. If you even look at, for the person who doesn't want to do it all online, they want to come in and sign. Once the loan package gets to us, it goes into a paperless process in the back end of things. So our team behind the scenes is, expedited the processing of a loan. If you remember when you and I worked together a couple lifetimes ago at a different lender, it was 6 weeks to get a loan commitment.
And everything was paper. Every single thing had to be printed out. And I remember handing in loan packages that were 3 inches thick, and I had to run around the office looking for the big binder clips to clip it together and go walk it over to the next person in the stage. So
there were never enough binder clips. There was never enough binder clips. Our new office in Plainville has no binder clips in it.
We don't have any of these sitting around. So yeah, I remember that always being a challenge, and having to just print everything off, and everything was very paper intensive. And certainly now, if somebody has their documents in paper format, they can bring them to us in the office and we scan them right in and hand the document back to them. So we don't need to keep any personal documents. They
Yeah.
can bring it to us and we scan it and that's it.
Katie will tell you, we bought a new copier, scanner, printer this week, and the cartridges do 7,000 pages. And my instruction to the team, there's 6 of us, was these 7,000 pages are going to last us 2 years. We're, in the old days, 7,000 pages would be gone at the end of a month.
Right. And I think that's why I don't even have access to the printer yet, is because you're still concerned that I'm just going to use all 7,000 of those pages. But anyway.
Well, Bob might beat you to it, but no, we, so, that's really the thing. When you think about it, I remember working with you when you and I first started working together, and we would sit for an hour and put a loan package together,
Mm-hmm.
And then copying it. And then, all right, Katie, take this out to the customer and get it signed. And that was an hour and a half. And then you'd come back and it was an hour and a half to photocopy all their documents, to get it into, to hand it to the next person who had it for an hour before it would go to pre-underwriting.
Yeah.
And,
Yeah.
Now in about 20 minutes, whether somebody wants to sign on paper or not, in 20 minutes, we have a full loan package together and out.
Right. Right. And there's literally one piece of paper. There's one document that requires a manual signature. So one piece of paper that the customer has to print out, or we print out on their behalf, and they manually sign. And then they can take a picture of it and send it back. So one piece of paper instead of a whole big stack. It just makes the signing of all the paperwork much easier.
It does, and more efficient. But again, and even if we have to slow the process down a little bit, for somebody who doesn't want to sign their loan documents electronically,
Sure.
It still saves a tremendous amount of time for us to set it up, to get it, Do we still need an hour to sit with them and sign it? Sure, but we didn't need 3 hours. But
Sure.
even still, once we pass that loan off into processing, our processor gets it, she's doing everything on it electronically.
Sure.
We're communicating with her and the customer never even knows.
Right.
So they still think they're going through an old school process, but really behind the scenes, we're it's up to date and futuristic technology the whole way.
And it just what popped into my head was this process of doing this electronically is so much more secure for the customer. And there's while in the past we were very security conscious and made sure to protect a customer's identity and documents and that kind of thing, pieces of paper get stuck together. Pieces of paper fall behind a desk, and it's nobody's fault, and it just happens. But this way, once an item is in the file, it's in there, and it's secure, and it's not going anywhere, and it's not getting stuck to another piece of paper. It's not getting jammed into a photocopier. It's just it's there, and it's done. So to me, that's a little bit safer of a process when protecting somebody's identity and protecting their private confidential information is even more important than it's ever been.
Let me give you a quick great story. In 2003, it was October of 2003. I was still in my first few years in the mortgage business, and I was going to game 1 of the World Series with another loan officer. And I was driving. He was working on a laptop that was not connected to the internet because we were in a car. And in 2003, there weren't mobile hotspots and stuff like that. Talking to a customer on his cell phone. We got to Yankee Stadium, parked the car in the garage, just regular old parking garage. We jumped out to have an adult beverage before the first pitch. He threw his laptop in the back seat. Now, everything was housed locally on that laptop. Right. Unlike now, everything we have is housed offsite in a server. It's encrypted and secure. We have to log into it through, secure networks to get to it. If someone stole my computer that I'm talking to you now, there's no consumer data on it.
Right.
They don't get through like 7 layers of encryption to get to any consumer data.
Armed guards, all that kind of thing.
Exactly. So this guy throws the laptop in the backseat along with, we stopped on the way to Yankee Stadium, like in Brookfield, to pick up a loan package from somebody. It was like this, like all their bills, tax returns, pay stubs, W-2s, bank accounts. Throws it in the back
everything.
Seat, throws it in the backseat with the laptop that's still open. We have a beer. We go into the game. We leave the game, we come out. He's like, oh, he's like, you didn't lock the car. I had completely forgotten to lock the car when we
Mhm.
walked away. Laptop and the customer file is still sitting there, thank God. But, that's the kind of thing that prior to these type of changes, you think about, I mean, I used to watch loan officers sitting at Starbucks on their laptops wide open to the public,
Mhm.
taking loan applications that way. I mean, I remember sitting there listening to somebody, all right, and you make how much money and you make how much, and I'm sitting at the next table, you know,
Right. And we're asking, and beyond that, we're asking for where do you live? What's your address? What's your social security number?
date of
What's your
birth,
date of birth?
how many kids
So,
do you have? Yeah, exactly.
right. Every possible piece of personal confidential information that, anyway.
That's why
So,
when we can use something like the Easy Street app, like this thing, oh, you can't see it because I've got a background on, but our Norcom Easy Street app, you give us your information directly, not verbally, through a secure connection that feeds direct into a secure server. It doesn't come to my phone. Um, it's not like, I mean, I do have customers who will text thing, nothing like, oh, do you want me to text you a social security number? I'm like, can you please feed it in through the app because I know it's secure.
mhm,
And there's nowhere on my phone that I can view the file, but it's all scrubbed, and
right, right.
only public personal info, name and address, which anyone can find anywhere.
Right, right. And what I also do like about the mobile app, the Easy Street mobile app you were just talking about, customers can follow along through the process. So
Sure.
once they find a house and they go under contract and we get the official process started, the official mortgage application started, they can follow along right on the mobile app. They get notified every time we move their file forward to the next step.
Yep.
There's so many cool things about that app that a customer can do. If a customer is out looking at a house with their realtor, they can use the mortgage calculator right on the mobile app to say, how much is this house going to cost me on a monthly basis? And they don't have to Google mortgage calculator that's branded to somebody else, that they're going to get a phone call 10 minutes later from somebody else. It's all branded to me and you and to your customer. So it's really kind of cool. And there's just a lot of things that a customer can do with that app and upload documents. Take a picture of something and upload it right into our system.
Yeah. Yeah. Take a
So,
picture of their pay stub and it comes right into us secure. You mentioned something there that, after the mortgage meltdown of 2008, 2009, the federal government did a lot of surveying of mortgage customers, and the big complaints were, transparency. Um,
mhm,
and one of the biggest complaints of every mortgage customer ever has been, you know, I don't know what's happening, right? Any
mhm,
calls we used to get in the old days were always like, can you just tell me what's going on? Because no one wanted to subscribe to the no news is good news.
right.
When there's a 6-week process, there's a long time with no news, right?
Mhm,
You get stuck in a stack. All right, there's 58 loans ahead of you. I got to spend days on each one of them to get to yours, and then you're going to get an answer. So we used to get a lot of calls back in the old days of, what's going on? And what am I going to say? You went from 58 to 42nd in line? You just,
right, right.
with you mentioning you get to follow along and 24 hours a day, you can see right where your loan is in process.
Mhm.
Um, I had a title order come in this morning. I already had the customer text me like, I got this notification. What does that mean? Are we ready to close? I'm like,
Not
you
yet.
still owe
Calm
me
down.
documents, but yeah, so, but that really alleviates a lot of the frustration of where am I in process. And for our
Right.
realtor partners as well, they can use the app to follow along as well if the customer allows that. So it takes a lot of the guesswork and really opens up the
Sure.
transparency for everyone involved. And then the next thing I think we're going to really see evolve, and it's kind of still in its, I don't want to say it's infancy, but Connecticut makes it a little bit more of a challenge is e-closings. Um,
Mhm.
and the nice part here is everyone gets their closing package sent to them in advance. They get all the time they need to read it. They can get on a Skype call or a Zoom call or something like that with the attorney who will talk them through every document, as they're
Mhm.
electronically signing. And it just makes things a lot easier. You know, you can now close all hours of the day and night from your home. You know, how many times have we had, I'll never forget, on a Friday afternoon years ago, doing a first and a second mortgage for a couple with twin 8-month-olds.
Yeah.
Husband came in, signed, went out. 2 mortgages, signed, went out. Wife came in, signed. I mean, it was like 4 hours on a Friday afternoon.
Oh my goodness.
Now you can do that kind of thing from home. When I say Connecticut makes it a little bit more difficult, is you got to understand, in Connecticut we have 169 municipalities, which all have their own form of government, which all require, when you record documents in the land records, you have to go to every town hall. You know, so if you close a loan in Sterling, Connecticut, your attorney's got to go to Sterling, Connecticut to file the documents in the land records. We don't have an electronic recording system yet in the state of Connecticut. And the reason being is this is one part of the country where we still have individual municipality governments, types of government versus county government. You know, if Connecticut had county government, which would be bad for a guy like me who's a local politician, but we'd have 8 different, you know, we have 8 counties, right? So we'd have 8 different recording. It'd be much easier to get 8 municipalities, 8 counties on one type of recording system versus 169.
Sure. And
so
actually,
hopefully in the next few years we'll see that improve, but that is the next wave of changes.
And during the COVID pandemic that we've been experiencing, the governor has sort of implemented temporary allowances for doing some of the things you're talking about, like doing some of these remote closings. My mother just refinanced her home, and we just did the closing about a month ago, and she was concerned about going into the attorney's office because of, because she's almost 70, because she was worried about being with other people. So with the temporary measures that have been allowed in the state of Connecticut, she was able to do the closing from her dining room table, and I was able to install Zoom on her iPad, and I was able to do that anyway. So put Zoom on the iPad, propped it up so she could have a conversation like this. You and I are in 2 different locations. So anyway, it was kind of cool. Or she was at the dining room table, the attorney was in the attorney's office, and went through the closing package. And there, when we got to the stage of she needed to have certain things notarized, the attorney recorded, and I promise I'm me, and that sort of thing. So hopefully we'll be able to, if anything good can come out of what's been happening, is we can move forward and utilize technology a little bit more to take care of some of the stuff that you were talking about, and just make it a little bit easier in that situation of, somebody has twin 8-month-olds. That's a lot for, both parents to be paying attention to something else for 45 minutes.
Sure.
So to be able to do something like that from home on the iPad, to me, it just seems a little bit easier to take advantage of that. So hopefully we'll be able to move forward with that a little bit.
To clarify for anybody who's watched to this point in the video, we do have e-closings now. I mean, let's throw the pandemic out of it. Prior to the pandemic and coming out of the pandemic, we're going to have we've had e-closings, and we're going to have e-closings. Essentially, the way it works now in Connecticut is just what I was talking about. You get your documents, you get on a call like this, the attorney's talking you through everything as you're signing, but then there's 3 documents that need to be signed in person. You would then go to their office to sign those 3 documents in person, but you're in and out in 5 minutes.
Right.
Versus in and out in an hour, hour and a half, things like that. So, the technology does exist, and, it's getting better every day, but, we can do e-closings now. To get to the full e-closing experience that they're having some success with, I believe in Virginia and in Pennsylvania, again, there's county form of government there. it's easier to implement when you're recording documents on a large scale like that versus 169 different municipalities.
Sure, sure. So I guess one of the things that I wanted to also talk about is we have at Norcom, we have, in my opinion, some benefits of working with us. So that's one thing that I like is an appraisal assurance. So can you talk about that a little bit?
Yeah. So when you buy a house, right, or you're going to refinance a house, there's some money you've normally got to put out of pocket. And let's face it, like, people are leery about putting cash out of pocket. So if you're buying a house, you almost always have a home inspection. It's not required by us, highly recommended. I've had home inspections on homes I've bought. I'd recommend it to anyone. You want to know what you're getting into there. The other thing is we have to have home inspections run, depending on how in depth you need to get, if you need to have water tests and septic tests and well tests and lead and
termites and all that.
Yeah, exactly. They could go anywhere from $500 on up. Let's just say the basic home inspection is $500. The other thing is you have to have an appraisal. We need to know that the property we're going to write you a loan on is worth what you're paying for it. So in the past, people always wanted to wait to get their appraisal done until the home inspection was done. Home inspection tends to break more deals than an appraisal does. So the problem is there might be a 10-day to 2-week waiting period. In some cases longer. Let's say they have a home inspection, it takes 7 days to get somebody out there and see the property, another day to write the report. There's a few $1,000s in repairs that are now going to negotiation. And let's say that takes a week, and now we're 17 days into the process, and we've got a commitment coming up in 4 days, and we haven't done an appraisal yet, right? So we would always you'd get caught in the situation where, like, I haven't done the appraisal because you don't want to spend the money, and now nobody wants to give you any more time to get the appraisal done, right? Like, hey, we don't want to spend the money on the appraisal. We want you to get it done, but we don't want to give you more time to get it done.
Mm-hmm.
So what we have is appraisal assurance, which basically says if you pay for an appraisal on a transaction with us, and we order the appraisal, the money gets spent, and the deal falls apart for any reason, during the process, whether it be home inspection, you get cold feet. I had a customer who lost their job during the pandemic after they had paid for an appraisal. Obviously, it closed. But if you come back to us within a year, okay, you will pay for the appraisal on the new house, but we'll credit you back what you paid for the first appraisal. So, for example, you pay $495 for an appraisal today. We do the appraisal, and in a week it falls out over home inspection issues. Okay. 3 months from now, you come back, you have another contract. We're going to collect another $495 for a conventional appraisal. But when you get to closing on that one, we're going to credit you that $495 back. Mm-hmm. So, while you spend some money, you're protected there that if it doesn't close and you come back within a year, you'll get reimbursed for that appraisal.
Gotcha. And that, to me, that's such an advantage because that helps us move through the process even faster. Because like you were talking about, in the past, home buyers have waited 2 weeks, 3 weeks, whatever. They've waited to order the appraisal, and it's potentially delayed the process. And nobody likes asking for more time, and it's tense. Nobody wants to ask for an extension and more time to what you've already agreed on upfront. You've agreed to close in a month, 6 weeks, 8 weeks, whatever it is. Nobody wants to wait any more time. So this allows us to get started on the appraisal upfront in the very beginning of the process and move through, just continue to move through and not have that be a delay.
Not worried about losing money.
Right.
Right. That's a lot of it. So
because the $500
it definitely
is a lot of money.
helps keep things moving.
Yeah.
Definitely helps keep things moving. So.
Yeah. Absolutely.
mortgage processing, in trying to get a mortgage, sooner is always better than later.
Sure.
When, it's funny when somebody says to me, "How fast can we close?" and I ask the first question I respond with the question is, "How fast are you going to get me what I need when I tell you I need it?"
Right.
I
Right.
mean, and that's so the truth of it. You and I are working together with a customer right now who 10 days ago we asked for a bank statement. And 9 days ago, we asked for a bank statement. And 8 days ago, we asked for a bank statement. And her commitment is due tomorrow. And we got the bank statement yesterday. Like,
Right.
why don't I
Right.
have commitment yet? Why don't you give me what I've asked you for? You know what I mean?
Mhm.
That's the truth of the matter. We can move so fast, but there is a customer component where they have to help us. We can't do it without you, the customer.
Sure. Sure.
And while
Absolutely.
we need your buy-in and we need you to help us we can do everything lightning fast, but you set the pace at how fast we go, because you, Mr. and Mrs. Customer, have to give me information.
Sure.
I can't get your bank statement. In the old days, I could call the bank and be like, "Hey, I need Katie Stevenson's bank account," and they'd give it to me,
Sure.
with a signed letter. Nowadays, they won't talk to us.
Right. Right. Absolutely. I know it's well, again, it's protecting, they're protecting their customers from any random person just accessing their information.
Sure.
So,
And I completely understand it.
yeah, so it's just one more thing to help us on our side keep the process moving as
Absolutely.
seamlessly, as seamlessly as possible. So, I guess the final thing I wanted to touch on is, and we had talked about this a little bit earlier, how Norcom sort of takes a practical approach to finding scenarios and products for, the right product for each customer. Everybody's situation is different.
Mhm.
Everybody has different types of employment. Everybody has, um, you know, different amounts of money to put into buying a home. So, can you touch a little bit on how we help the borrower choose the right situation or the
Sure.
right product for them?
So just like our process is not cookie cutter, we tailor it to the way the consumer wants to work, whether it be an old school approach or the new school approach. We take the same approach with finding the best mortgage products for them. So um, a lot of times, where it really begins is whether we're using technology or not, there needs to be a conversation with a customer, and it might happen through text, it might happen through something like this or a face-to-face meeting, but there needs to be a conversation, and we have to listen. What is it they're telling us? What is it they're really trying to achieve? um, so I'll give you, for example, a young person I know from town. Her mother called me and said, "You have to get my daughter a specific type of loan." And I said,
Mm-hmm.
"Okay, have her call me." And they wanted to work old school. I'm like, "Have her call me.
Mm-hmm.
I'll take her through the process to find out if we can get her that." I get all the data, years on work and income levels and how much money you have, and we run a credit report. And she's got great credit, and she's got good money in the bank, and doesn't make enough to buy the house.
Mm-hmm.
So, I'm like, "Listen, because I knew, let's talk to your mother. She's very involved in this, and we'll explain it to her." And then her mother calls back and says, "But she has to have this house." I'm like, "I understand that, but for the kind of loan you've decided you want her to have, she doesn't qualify. She
Mm-hmm.
doesn't qualify. The only way I can do it is if the two of you buy it together. But then she loses out on this other type of loan. I understand that. But what's the most important thing here? Getting that type of loan that she can't have right now, or getting this house." And here's the thing.
Mm-hmm.
We're looking at the payments on paper, and the difference is like $14 a month. I mean, I'm not talking like, "Hey, the way you want to do it is $1,000, and the way I can do it is $1,250." I'm saying,
Right.
you're $1,262 versus $1,276.
And what's that? You go to Starbucks twice a month?
I mean,
You
and
know,
it,
you
for her mother, it
twice
was
a
more
month?
about, but she's a first-time buyer. She has to have a first-time buyer program. And I'm saying,
Mm-hmm.
first-time buyer program doesn't let her work. So it's about taking that kind of overall, I'm not going to go into this with any predetermination as to, hey, this is the program I want you to have because it's easy to work with. I'm going to look at what you qualify for. I'm going to listen to what can you afford to pay? Let me back up. We're not car dealers. It's not what can you afford to pay? What do you want to pay? What's your budget, and can I fit that budget?
Right? And what do you feel comfortable with?
Yeah, right.
Because a customer has to pay for this. It's like you said, it's not a car loan that you pay for a couple of years and you don't feel comfortable with it anymore. You drive it back to the dealer and you're done.
Yeah.
This is something that you have to pay for. You as a borrower or a homeowner have to pay for this for the next 30 years. Yeah. It's a long time.
We ended up getting into this thing where I was able, they came in asking for one thing. It didn't work just based on debt ratio, right? So I'm like, look, you can do this, you can do this, you can do this. I ran examples of you could do conventional 3% down, conventional 5% down, conventional 20% down. The parent now is saying, oh, I'm just going to buy it myself. And I'm saying, you don't want to, but you can. It's an investment property, 15% down. This is what the payment is and the rate. So you lay it all out on paper. Katie, at the end of the day, it's what fits them, and they have to make the decision. I can tell you, for me, this is the way I would go, but the way I manage my finances isn't the way they manage theirs, potentially.
Right.
So it's really about finding the right thing. Many times we have customers call that are looking for something, they don't qualify, but because we have that full product suite and some proprietary products, we have the opportunity to offer them, something that's going to work. And we're talking about, agency loans, government insured loans. We're not talking about anything, some strange kind of, I talked to a woman this week who's got a 15 or 12% interest only loan, hard money that she's, we're trying to refinance her out of it. We're not talking about those kind of loans. We're talking about
right.
Fannie Mae and Freddie Mac and FHA and VA and USDA. And, we do have some proprietary things for unique situations, but much like we tailor the process to the person, we tailor the loan options to the person and let them decide what's the best fit for them. Here's your payment. Here's your interest rate. Here's the cash you need. What's the pros and cons? And we lay it out. We work.
Right. And every loan program has sort of if this, then that. There's all sorts of, like you talked about, debt to income ratios. There are all sorts of rules for each program that we have to follow. So if it's fitting the customer into the particular scenarios and then letting them decide what works for them. Should they qualify for more than one loan type?
Yeah. Exactly.
Sometimes a prospective home buyer only qualifies for one program.
Mm-hmm. Exactly.
So, and it makes the choice a little bit easier because there's only one. And if they want to buy the house now, they use this. And
you and I talk multiple times a week, and many times you're like, hey, I was thinking that as I was unraveling the situation with this customer that they would go this way, but I can't get it to work, and then we always take a second look at it. What's the best way to get this to them? And ultimately, like, for example, the customer I was talking about, what's most important to you? Getting that program and waiting to get it until there's more income, or getting this house?
Right.
And that's not a decision I can make. That's their decision. If you have to get this house, I'm going to get you the best deal I can on it.
Sure, because in 6 months, in your scenario, in 6 months when there might be more income, that house is not necessarily going to be available.
Yeah.
And exactly. if living in that particular house is important to this person, then she needs to say, all right, I'll pay $14 extra a month and skip going to Starbucks a couple times during the month or whatever.
$14 a month. I think it was we have to have this program mentality without really knowing, it's just like, some people, it's funny. People have asked me for years, what's the best mortgage program? You know what the best mortgage program
Oh,
is?
I do. I know the answer. It's what they qualify for.
It's the one you qualify for,
Yes.
right? I mean,
Yes.
I talked to a guy yesterday. His best mortgage program was a 10-1 arm. You know, for a customer who doesn't, has long-term 30-year plans of being in a house, a 10-1 arm might not be the best fit.
Sure.
But it's the one you qualify for. Let's not worry about the ones you can't have. Let's worry about the ones you can.
Sure.
And see which one fits you best. And
Exactly.
if you're like, hey, I really want that other thing because someone told me I should have it, right? Then, all right, well, when your income goes up in 6 months or 8 months, we'll get you into that.
Sure, but the house you want today is not going, especially in this super competitive seller's market where houses go on the market and a couple days later they have multiple offers.
Yep.
So if there's a particular house that somebody just simply has to have for whatever reason, then they need to make a decision about the one or two programs that are available to them today.
Yes, exactly.
And we can work with them to give them every possible advantage to help them get that house, and work with their realtor and work with them quickly and give them every advantage to get into the house of their dreams.
Yeah, I mean, we have a responsibility through our license. Because we're licensed, we have a responsibility to present the best possible options to the customer. We can't present options which are just better for us. We have to present all options. We have to present the best options to them. So it's we have to put the customer first in these situations. But unfortunately, sometimes we have to tell them, I understand you want this program because you listen to somebody talk about it, but it doesn't necessarily mean it's going to fit your needs.
Sure.
For years, I wanted a Jeep Wrangler. For years, I wanted one. I bought one. I test drove one in Arizona. I rented one when I was out there.
Sure.
Had so much fun for a weekend. I bought one. Oh my God, it didn't fit my needs. It's the same kind of thing, right?
Sure.
I wanted a cape. I bought a cape. I live in a cape right now. You know what? On these warm spring evenings, summer nights, it doesn't fit my needs. 90 degrees on the second floor of a cape.
Sure.
So it's like sometimes you got to put your ego aside a little bit and say, all right, what's really the smart play here?
Sure.
Same thing on financing. So we've talked way too long, I think.
Yes.
I think to sum it up, we're here to tailor the process and the product to you, the consumer. Katie's a great resource. If I could give a shout out, if you want to learn more about Katie or any of us, hit up plainvillemortgage.com. Stop down and see our brand new office in the center of Plainville, 59A Whiting Street. Leave your card on our business bulletin board or community business bulletin board, and look for us to have some events in the future.
Yeah. So 59A Whiting Street, we're right across from the post office.
Yes.
In the center of town. So yeah, come on down and see us. We'd be happy to have you come in and check us out. So
anybody who watches this point, I promise Katie will have a more interesting guest next time and a true expert in their field.
Yes, I have some excellent folks lined up going forward. So thank you, Jesse. I appreciate your time and kind of chatting and reminiscing about the business and providing some good.
The good old days of loan files being this thick and binder clips.
Yeah, and binder clips and all that kind of good stuff. So, all right. Well, thank you. I very much appreciate your time. And all right, so we will end it here. All right.
All right. I'll see you later.
Thank you.